when his vehicle hit a median and rolled over several times. He was the only one in the vehicle. Investigators say there was no evidence of impairment, and it appears Woods was speeding.
Stocks are down a bit, but nothing major. Financial expert Terry Savage joined us. Good morning, Terry.
Hey, Terry.
Good morning. Ready to answer your questions.
All right. Viewer questions have been stacking up, so let's get to them. Here's the first. This person says, I've looked around and I have been wondering if we have to pay income tax on the stimulus payment.
No. This is a gift. It's a gift from your government, your grandchildren who will pay it off, but it is tax-free to you, so you don't report your stimulus payment anywhere on your tax return.
All right.
Next question. Are there any particular rules of thumb for deciding whether to file separate or married joint status on your income tax filings for a married couple?
Well, typically, you will pay lower taxes if you're married and married filing jointly. I think of a couple of reasons why you might still be married and file separately. Perhaps you're in the middle of a divorce. You don't want to sign your spouse's tax return because there is practically no such thing as an innocent spouse. So if you're concerned about your spouse's activities, you file separately. Perhaps because we don't know if there will be another round of stimulus, but previously stimulus payments were withheld to spouses who owed back child support. Your current spouse might have owed it in the past from a previous marriage. That could be another reason to file separately. Consult your accountant, but actually, basically, you're probably better off filing jointly from a money point of view.
All right, next question. I received an overpayment notice from Illinois PUA, that's Pandemic Unemployment Assistance, and they filed an appeal. How do I know if the appeal is received, and how long will it take to get a response?
Okay, this is one of the most shameful things going on amidst many shameful things at the IDES, the Illinois Unemployment Offices. They calculated the PUA benefits. Those are the self-employed unemployed benefits. Do you remember when they started? It took them a good 6 weeks to get going on it. You submitted your 1099s from the previous year, and they calculated your benefits. They are now telling thousands upon thousands of Illinois PUA recipients that, sorry, we overpaid you. They're demanding the money be repaid, which is scary because many people are still unemployed. Now, as a matter of fact, in the December CARES Act bill, it said to the states specifically, you do not have to demand money back if you overpaid people. Illinois is not required to do that. I have written to the governor's assistants, the head of IDES, the spokesperson who never speaks, and there is no real requirement from the federal government that they take the money back. So number one, you wait till they come after you, even if they've demanded it. But number two, what they can do and are doing to people who sorely need their benefits and are still collecting, they're taking money out of your current check. I think that's inhumane and insane, given it's no longer the law. You can appeal and wait for them to call you, but there's really nothing you can do until the governor steps in and says, this is crazy.
All right, next question. I was laid off and was told I have to take my 401k. What do I do?
Yeah, well, don't just take it. Don't take it. Don't pay taxes. And if you're under 59 and a half, you'd pay a 10% penalty. But it's probably a good idea when you leave a previous employer to roll it over. So I would suggest you call 1-800-FIDELITY or 1-800-VANGUARD. They will help you open an IRA rollover account, and they will actually do the money transfer. You won't keep your old funds. They'll just transfer the cash into your new rollover IRA. That leaves you with a decision because they're not leading you by the hand on how to invest. But if you're young, you can just put half in the S&P 500 stock market index fund. Now, maybe if you're getting closer to retirement, an equity income fund. If you still probably have 20, 25 years if you're going to a new job. So keep that money going in an IRA rollover account. Do not take a check.
All right. For more, you can go to terrysavage.com. Terry, thanks again.
Thanks, Terry.
Thank you.
All right, it's 9:24 time.